So is the Toronto real estate market starting to turn a corner? Are we seeing some signs of life? Is it going to roar back to life? We have all of this and more in today's video. Welcome back to the channel. My name is Gianluca and I help run a real estate team called Grans Haven Real Estate in the GTA and surrounding areas. And today we're going to be discussing the February 2024 numbers in the Toronto real estate market. If you'd like to book a chat with us, go straight to the description box right down below and you can set up a time to talk with us one-on-one. Without further ado, let's get right into this video. We're going to be discussing 5 key topics today. Number 1, increased sales and listings. Number 2, the price trends. Number 3, the impact of borrowing costs. Number 4, the future outlook. And number 5, the social and economic impact. So what happened in February? Yes, we did have an increased amount of sales and an increased amount of listings. What's the reason for the increased amount of sales? Well, a lot of people are trying to get ahead of the curve of these interest rate cuts. Again, we are anticipating these rate cuts sometime this year. So many people want to get ahead of the curve, get into the market before they have to face that increased buyer competition and, over time, the gradual increase in prices. Do I think we're going to see a substantial increase in prices right away when the rates come down? I personally don't think so just yet. I still do think it's going to take some time for the prices to increase, but typically as those rates come down, the prices do increase. So there are many people who want to get ahead of the curve and want to avoid it altogether. Talking about those fixed rates, things are trying to get a little bit more affordable because some people are locking into those 2 or 3 year fixed, getting into that property, solidifying that asset, and then renegotiating their term once those rates come down in 2 to 3 years time. So yes, overall, there was an increased amount of sales and an increased amount of listings. Price trends. So, okay. Yes, prices did go up. They did not go up substantially. They only went up about 1.1%. So it's not a crazy price increase. So what I am seeing in the market right now, especially when, people are holding offers in many situations that I've experienced personally, even when somebody's holding offers on the property, by the time that deal is said and done, I'm not seeing that property go for substantially more than what the market is calling for from a value perspective. So for the sake of discussion, if a property is worth $650, if somebody's holding offers, let's just say at $499 or $599, typically that property or that whatever some people are buying is going to sell within that amount. So if it's actually worth $650 and somebody wants to hold offers, let's just say at $499 or $599, most likely what I've been seeing, it's going in and around that vicinity of that, 640, 650, maybe even 660 range. I've experienced this personally when I was helping some clients put offers in on condos with offer presentations. Impact of borrowing costs. So the higher borrowing costs have affected, many market dynamics. They keep the home sales below the peak in 2021, which basically it's prompting the consumers to adjust their preferences. So yes, things are still expensive, obviously from a lending standpoint. So we're not seeing numbers yet that we did obviously in the peak in 2021 when the rates were a little bit lower than they were now. So what's happening is that people are starting to adjust their preferences. Either they're adjusting their budget or they're going to a different area into a product that they can afford. So that's another thing that I've been noticing. I've also been noticing a lot too that, people have been saving more for a heftier down payment. This way they're not affected as much by mortgage rates. I'm talking to a lot of, either first-time home buyers or people who are looking to re-enter the market at some point, and they've put away a little bit of a bigger down payment in order to offset the higher cost of interest rates and lending. Excuse me. Okay. So future outlook here. So market analysts anticipate a shift in buyer behavior throughout 2024, with more buyers entering the market and adjusting their housing preferences due to changing economic conditions. While lower interest rates are expected in the second half of the year, are likely to further stimulate demand for housing. Yes, okay, so I said that obviously in the beginning of the video, people are just trying to get ahead of the curve for the most part if they are financially able to do so. With the anticipation of the rate cuts, people just, they don't want to deal with the competition happening later on. So many are just biting the bullet, saying they'll deal with a little bit of a higher cost month to month on their mortgage payment, and then obviously they'll renegotiate it later on, and they're making the necessary adjustments. So whether it be going, let's just say, further out to the outskirts to get into something more affordable, or getting into a different product type. So for example, if somebody initially wanted a semi-detached, maybe they're going to go to a townhome, or maybe they're going to go into a condo just to get into the market to start building that equity somewhere. So yes, do we anticipate rate cuts sometime this year? Absolutely we do. From a Bank of Canada perspective, many people are saying that we're supposed to get rate cuts, potentially maybe in March or April. Personally, I don't think that's going to happen, because the Bank of Canada also knows that if those rates start to come down, it's going to reignite the housing market, or begin to reignite the housing market, which is also going to contribute to inflationary pressure. So the way things are sitting right now, that Bank of Canada wants to make sure that the inflation issue is completely dead before they even decide to consider bringing down those rates. There's also that fine line also between keeping the rates high for too long, because if you keep the rates high for too long, you also run the risk of going into a deeper and deeper recession. So that's something that they also want to avoid too. So the Bank of Canada is going to have, an interesting balancing act when it comes to when they're going to bring those rates down. So that's another super important factor to consider. Social and economic impact, population growth, and the importance of affordable housing are highlighted as crucial factors in the GTA's real estate market, with efforts to streamline regulation and increase housing supply. Okay, so we've been talking about this before. We need to bring more housing supply to the market. Like, based upon the amount of demand that we have for housing and how many, units of inventory we have currently, we know that eventually the real estate market is going to go back up based upon the demand that's happening right now in the market. So one of the solutions to help with affordability is to simply just bring more supply to the market. We obviously know in a high interest rate environment, it's difficult for these developers, to keep those housing starts regular, obviously, because things are getting more and more expensive. But again, the faster those rates come down, the faster we can start contributing to that supply issue. I mean, it's nice to hear that we're also getting some policy implementations for these developers from a government standpoint, which is very nice to hear. But I definitely do think we need to get more supply coming into the market in order to keep up with the amount of demand. And again, once those rates come down, affordability typically tends to get a little bit easier from a mortgage standpoint. So people are going to start re-entering the market. I want to touch upon the Bank of Canada and interest rates. I mean, we know we have our interest rate announcement coming in March. Do I think that they're going to increase the rates? No, I do not. Do I think they're going to decrease the rates? I definitely think there's a very, very slim chance of that happening. I really don't think that's going to happen at all. Do I think they're going to hold the rate steady in March? Yes, I do. I still think they're going to adopt that wait and see approach when it comes to those rates. Going into the springtime, do I think we're going to see rate cuts in the spring? I really think the chances are very slim. I think they're still going to hold out these higher rates, until they get more of a clearer picture of the overall economic framework of the country. Also, I do think if they start to bring those rates down, you risk reigniting that housing market, or starting that reignition, which is going to cause pressure on inflation, which is exactly what they want to avoid. Again, thank you so much, oh my goodness. Thank you so much for listening to this video. If you have any questions, feel free to reach out. My number is 647-818-1330, or you can book a call with us right down below in the description box. Thank you.